Hey, everybody. This is Dan Eisenberg again on ScaleApp Podcasts. I'm back. This is episode 33. I'm excited that we've gotten this far, and I'll introduce our guest in just a minute. But as you know, ScaleApp Podcasts for me is a serious hobby. It's something that uh, allows me, with you all, to explore the mysteries and learn some of the lessons about how you actually grow companies. And we focus on companies that have passed the 5 million something, let's say dollars, euro, pound level. And so their main question isn't only just, exactly who am I? Do I have product market fit? But it's really, how do I really grow my market into substantial revenues? And we've been lucky to have companies that have 100, 200, $500 million in revenues by now, as well as 5 to 10. So I'm really excited to have with me Kevin Kilty, who's the CEO and founder of a very interesting company called Hubpay. So Kevin, just say hi so people hear your voice.
Hello there.
So I think you can tell two things from Kevin just from that very short hello. A, he's from the UK, and B, he's a man. So uh, and luckily, actually, I've been very proud of the fact that we do have several women scalers that have been. Kevin is based in the UK, but we'll get into that because he travels around a lot. So I'm going to ask, as I'm wont to do, this is sort of quote unquote punishment. If you haven't listened to my podcast, so this is how I always start off. It's a little bit of a curveball, so it's sort of fasten your seatbelt. Tell us who Kevin Kilty is, but don't say anything at all about Hubpay.
Okay, Dan. Well, first of all, thank you very much for having me. Great to
Thank
be
you.
with you on the podcast. In summary, well, you said male, 41 male, 41-year-old male, Irish immigrant. I was actually born in Ireland. The family migrated when we were young. Grew up near London. Went straight into banking after university. And in my spare time, did quite a lot of work in microfinance and impact investing, which kind of drove my interest in looking at certainly emerging markets in finance and also the significant impact financial inclusion could make across every aspect of an economy.
Great. We'll get to some of that. Hobbies, pastimes, or you have zero time for hobbies, and whenever you can,
Uh,
just go to
uh,
sleep.
I like taking I've just got back I was in Dubai, I just got from Dubai to London, but the last few months went ice climbing in Switzerland, and then I like to take my motorbike up to Rasselheimer in UAE to go rock climbing there.
That's amazing. Ice climbing. It sounds dangerous to me.
It's good as long as you're good at roping in. It's fine, but it's great fun.
In one of my books, I write about risk taking, and I use mountain climbing because I've actually climbed mountains.
Right.
I actually climbed a mountain once with John Krakauer.
Okay.
This was a neighbor of ours in Corvallis, Oregon. But I try to, when I talk about risk taking, one of the things that impressed me about mountain climbers is it's intrinsically risky, but everything they do is to try and reduce that risk. All the
Yes.
equipment and the skill and everything is
Yeah.
to make it as riskless as possible while preserving that element of risk. It's kind of a paradox. It's always struck me.
So it certainly is, and they're people who are very mindful of risk. So it's an interesting type of profile.
Yeah. Well, and obviously that comes up and talks about entrepreneurship. Well, maybe we'll get to that. So now let's turn to Hubpay. And I'm going to ask you again a little bit differently. Tell us something about Hubpay, but don't tell us don't give us any numbers.
Sure.
What is the pain and what is the solution to the pain? And where do you stand right now? Then we'll get into the numbers.
Sure. Where we stand right now is we are a cross-border B2B platform, effectively a unified treasury platform for businesses, a one-stop shop for businesses to execute all their payments. How we started was more on the retail side, so retail remittances, and then we expanded into big cross-border business transactions, and now that's our primary focus. We still do some retail transactions, but it is effectively in the UAE, a one-stop shop platform for businesses to execute payments efficiently.
So you started in the UAE, but you're based
Exactly.
in London. Just a couple of sentences about what is about the UAE that makes this a great starting place for this kind of business.
The UAE I see as the gateway to the emerging world. And you can see that physically with its largest airport on the planet in Dubai, the largest seaport in there. But what they built around corporate governance regulation has enabled it to become a trading hub. And so when I was there, I could see there was significant cross-border flows, but there was a gap in the market for a financial platform to really take that to the next level.
So explain from the user perspective
Sure.
what, why is this such a great thing for, I guess
Yeah.
I'm a business, right? I don't know, am I a small business, medium-sized
Yeah.
business?
Absolutely. So as it stands, like I said, well, initially it was you're a retail customer like yourself or I, and you're in the UAE and you want to send money efficiently back home, similar to TransferWise or Remitly.
Right.
Where it sits now, its kind of core focus is there's two kind of you're a business in the UAE. You want to either it's your first business, your first time getting an account, and we can onboard in 24 hours and give you a full suite of account numbers, or two, you're a more established business and you need a wider spectrum of cross-border payments capabilities.
So I'm only guessing that the UAE also is a hub. It's a very kind of heterogeneous environment from the point of view of currency. Uh,
Yeah, I mean, it is. There's what you have in terms of the dynamics here is the UAE is a nation of their immigrants, right? And so with that brings kind of all the kind of businesses from all over the world, right? Whether it's from China or the US or Brazil. Um, and so there is, and so that has created this kind of, I think they try and based it on Cordoba back in the historic years. So that has made it that trading hub. And as a result of that, there is a whole range of kind of requirements that businesses have that's not currently being met by the market.
okay, we want to come back a little bit later to where after UAE. But before doing that, now if you could just tell us about Hubpay, just give us the story with a few numbers, whatever you can share with
Sure.
us. Yeah.
Yeah. So in terms of its genesis, that was back in 2018, 2019. I was in the UAE. I was surprised there was lack of fintech disruption. And my view is I saw there was a initial proposition for like a TransferWise in the kind of region, starting with a retail solution and moving to corporate. So we got licensed, raised seed round from US venture capital, from Run Ventures from Utah, went through an accelerator, launched in beginning really of 21 and started with retail remittances through 21 and 22, raised a successful Series A in January of 22, $20 million led by Run and other US VC, and then expanded out the business there. But in all honest truth, we were too early in the market. There was some of the lacking the capabilities around financial infrastructure that were impending the growth because we wanted to move more into payroll on the retail side, which wasn't successful in the way we wanted it to. And on the business side, we wanted the kind of full suite of solutions. And very simply, we were too early in the market. So in terms of numbers, to your point, Dan, we were in the kind of 1 to 2 million ARR really from kind of 22 from 23 really to the end of 24. And then once some critical capabilities came online around with bank infrastructure, then it shifted significantly, and now we're sitting about 7.5 million ARR.
Yeah, pushing into eight digits. It sounds like pretty soon, maybe
Yes.
maybe this year. So let's talk about these transitions, if they are transitions, because what we're trying to explore in the podcast is again the whole process of scaling. It sounds like you went through some transitions, one of which was sort of the actual product market fit, wasn't quite there, and then there was some change. The market got more mature, the product and your focus, your strategy shifted a little bit. That's what it sounds like. You raised some money and now you're just getting traction. Say a little.
I think, I'm sure every founder will defend their initial investment thesis vigorously, but the initial investment thesis in terms of product market fit, no, I still think remains. We launched retail remittance. There was a clear use case for that in the market and that worked. The issue in the UAE is this a significant percentage of customers who are either unbanked or underbanked, so they could not fund their wallets easily. And so we wanted to become a payroll provider and integrate into the national payroll system, and the tech simply wasn't viable there at that time to execute that. And so that's what actually now I think That is still a major use case in the UAE and KSA. We haven't seen anyone execute it effectively yet. I think they will do so. And to give you an example about product market fit, you have seen payroll be massive in other markets globally, Payling, Deal, etc. On the corporate side, again, we wanted a one-stop shop. The capabilities weren't there. They are there now, and it now works.
So if I understand correctly, though, your primary focus is business at this point.
It's now corporate.
Yeah.
We do some payroll, but the corporate is just far easier to execute this time. It's got less moving parts, and it's got a far larger market to address. And that's an important point on that. If you look globally and look at more developed markets like Europe, retail is huge with fintechs, the Monzo, etc. Retail is a fraction compared to business. We have the same dynamic in the UAE, and therefore it's just far easier to make traction and add much more value on the corporate side.
So, so what are some of the things that you think you're really getting right in the scaling process as you approach, let's say, 8 digits, and you're going to whiz right by that, I think, in a few months.
Yeah.
That's my private comment. You didn't say that. I said that. By the way, full disclosure, I'm a limited partner in a venture fund that is an investor in Hubpay, and that's why I got to meet Kevin, who's otherwise very busy. So that's just disclosure. So I have an interest in your being successful. As you go by, sort of, first of all, what are some of the things you detect? Hey, we got that right.
So I think we could really separate that into what we control and what we cannot control. And what we cannot control is third-party critical infrastructure. And if I want to give you an example, is you all heard about the kind of success of Revolut in the UK and then into Europe and globally. What you didn't hear about was the 50 fintechs came before with pretty much the same plan, but the virtual IBANs weren't there, the APIs weren't there, maybe the VCs weren't as hungry, etc. Right? It just was they were too early, right? And you would have seen, Amazon was a wonderful idea. Did a lot of other people have e-commerce ideas earlier on? Sure, they did. And so the same was true in the UAE. And to answer what we got right and what we control is, we knew there were the two gaps in the market were a business wants to get an account very quickly and have just basic capabilities. And secondly, a larger business wants to have improved FX delivery, improved pricing, and a decent platform. Frankly, still relatively quite simple kind of requests. And we got that right.
So simplicity, speed, and some incremental benefits in terms of service, if I sort of stand back.
Yeah, I did the three criteria: speed, both in onboarding and execution, the product suite in terms of its capability, etc., and also pricing across the board. We are just an investor value proposition business.
So you got that right. And you're saying there are a lot of companies that fell by the wayside because they missed the timing or didn't understand what exactly were the enablers and the infrastructure, et cetera, that would allow them to be successful. And then just sort of comes a Revolut, same business model, but the pieces are in place.
That I think really is timing is everything. I think, yeah. I also would say no, I don't know Nikolai and Vlad, the co-founders there. From what I've heard of them, they are absolute machines, right? And there also comes down to, the timing was right, but the execution was absolutely on point. And so I think that's a key factor. Other people who may have got the timing there a bit closer, were they as aggressive, were they as tenacious, were they as good in terms of getting things done?
So what I'm struck by in your answer is you gave just there are a few very simple things. Yet what you're doing is quite complex, and there's a lot of complexity in it. But you lay it down the way you described. You boil that down to just a few simple, critical, let's say, key success factors.
That's exactly it. Certainly from a customer point of view, the customer requests, the demands are relatively simple. I want to get an account. I want to be able to send money everywhere. I want it to get there quickly, and I don't want it to cost an arm and a leg. That's the demand from the customer. And the execution behind it in terms of risk, tech, operational systems is where the work is. But in terms of its idea, it is not quantum computing.
Right. And so if you, I asked about things that I think you got right. The obvious next question is, what are the challenges that you had to figure out, or that you're facing now, that you're sort of scratching your head and say, well, A, we didn't get that wrong, or we're not sure what the right thing is?
Well, there's strategic missteps, which I think might be a separate question to what you're asking. In terms of from a build point of view, a design point of view, the um, what is difficult or what is challenging is probably integrating with third-party systems, because you still want to be able to connect. We're effectively building a platform. That platform, just like a light switch, needs to collect all the lights globally. And what is the grinding work is you're trying to find the best way to connect into different platforms and kind of different systems in that area. I think we did everything we could on those areas. We could have probably been boxed a little more clever in dealing with some of these large financial institutions globally.
Let's talk a little bit about the organization itself and the processes
Sure.
you need to build up, because we talked about strategy more or less so far. Tell us a little bit about your organization, your people, and what you think are some of the characteristics of that organization that you're going to need in order to, and I'm going to stretch it a little bit, to get to, let's say, 100 million or 500 million.
Yeah, I mean, 100 million I see quite doable. You mentioned there about figures. We want to get.
Did you say
10 million.
doable? You said
100 million is quite doable. And here's so you asked about and you mentioned figures there, Dan. On the kind of 10 million analyzed figure, we expect that to be in Q2, right? So that's when we expect to cross that threshold. We have done that on a shoestring because we spent so much money just getting and surviving to this position. But at 10 million analyzed, we're now profitable. And so therefore, if you bring in any third-party capital, as you know, we're going to market with the Series B, that is there purely for growth and expansion. And so it really is the old phrase Sir Richard Branson has said, the first million is the harvest type scenario, right? And so much of these kind of building blocks, but we have a very good platform. I wouldn't mind coming on to the tech architecture and how we've built it up thus far, but we've got all the core building blocks now in place and working very well. Now we need to put a bit of fuel in there, and we need to build further product innovation on top. Building this next bit of product innovation is much more in our control because we've got the quick key stuff done now, and we can move very quickly. If I'm waiting for a bank to integrate, it could be 6 months. If we release a product sprint, it's a week.
so. Talk about organization.
And just briefly coming back to when do we get to 100 million ARR? 2 to 3 years. Especially once we go live in UK and Europe and connect Europe and Gulf together. We can come back to international expansion in a second. On your question around team structure, 58 employees in the team, split really across 4 divisions. Engineering, which has 10. And you asked where I split my time. I'm split between the UAE and the UK. We have an active trading business in the UAE, which has done very well and will carry on scaling massively. We're going to go live in UK and Europe this year. Our CTO and most of our engineers are in the UK, and we looked globally, and we were finding the best fintech talent was UK based at that time. And so team structure, 4 divisions, engineering about 10 people, risk about 12 to 14, pay ops and back office functions, and mix, and then the biggest function will be sales. So there's your kind of 4, and that's split predominantly across UAE and UK.
So that's sort of the hardware of the organization, so to speak, or the peopleware.
Yes.
Let's talk a little bit about what you're trying to accomplish in terms of the culture, the kind of organization, the operating principles of the persona, let's say, of the company.
Yeah.
What kind of culture, persona, etc., are you going to need to get to that $100 million ARR?
Well, I think one of the downsides been around for the last few years, you've burnt a lot of money getting to a position. One of the upsides is you've got a pretty idea who you are, and you've got a quite good consolidated team. So across the top level, our biggest strength is I'm CEO, Dan is our CTO, John is our Chief Risk Officer. They're the 2 most important pieces of the business. Your risk engine allows you to stay trading. We are financially regulated. It allows you to acquire regulations, build on them, build out partnerships to make sure you don't trip up. And on the engineering, it's can you build the best tech out there as efficiently as possible? So they're the kind of C level, and then we've got a strong kind of captains at kind of VP level across sales and kind of product, etc. Culture-wise, we have a team. Most of that team have been with us now for 3 years. They work very well together. The principles we have around the business is very much the kind of Netflix approach, I would say, to engineering, which I'm sure you've seen, got a lot of coverage around we're a team, not a family. We want to focus on, this is like you showing up to rugby or football practice. Let's focus on execution. Let's focus on honest and kind of diligent work, and let's fundamentally deliver that kind of value for shareholders and customers. So I would say relatively vanilla around that space, but very much a team ethos to try and build a culture of excellence across all four divisions.
What's the difference between a team and a family as far as an organization goes?
I think Netflix defined it very well, because a lot of businesses say we're a family. Your family are with you no matter what happens. You do really badly at school, your family's there. Your relationship breaks up, your family's there. You don't do a good job, or you decide, I'm not going to go to work today, your family's there. Your team is certainly not. You may have really good friendships that you cultivate over years of working together, but at the end of the day, you must execute. And if you cannot execute, if you're not delivering the value for the team, for the shareholders, then unfortunately you can't be part of that team. And that's why I think it's very important in life to have both in your life.
So let me ask you this. Some people say that the team that got me to 1 million and maybe to 10 million is not the same team that will get me to 100 million or 500 million. What are your thoughts about that?
Yeah, the old quandary of build, launch, and scale. Are they three separate teams? We have had a reasonable amount of turnover. However, a lot of the senior people would have lasted us all the way through and would have stayed with us right now. To be honest, some of them just got exhausted with it, in terms of it had been 5 years, or some of them as long as 5 years. Most of them like kind of 3 years. It's long hours. And the hardest thing, we certainly have this through 23 and 24, a bit of even 25, is you don't mind working hard, but you get burnt out when you're working hard and it's simply not working. So I think we've been very fortunate on that team to go forward. I do think, and one of the reasons I'm back in London right now is I want to recruit some expert talent in a few fields to take this business now to the next level. But that's more about subject matter expertise than it would be about culture or leadership.
So is that because it's harder to solve for professional expertise than it is for cultural fit?
Yeah. I think the kind of cultural fit is, I previously worked in kind of banking and that kind of area. There are a few. I mean, I certainly need to codify this and structure this a lot better, Dan, after in this kind of year. But in terms of what is our core value set, but we run a very flat structure, right? It's not hierarchical. We absolutely engage in proactive discussion, positive kind of tension. But there comes with the mutual respect in that. One of the things I've got a huge amount of respect from the UAE is, as long as you're there to add value, everybody is welcome. And so you end up and look at our team right now. You've got the holy month of Ramadan starting, I believe, end of this week. I've got team from all corners of the world and every religion, faith. I mean, there must be about 15 languages spoken in office, and the UAE's office is only about 45 people. And so there is that kind of mutual respect in there, but there is that professionalism absolutely needs to be pervasive, and technical expertise you can bring in, correct?
So let's talk a little bit about money. Not the money that you're making, but the money that you're raising. And let's talk a little bit about where you are right now. I know it's hard to raise money when you're starting, but now you've got a proven model, you're scaling, you're approaching break even. The money that you raise, you say you're going to use primarily to scale up, to grow, not to cover your deficits. Talk about the kinds of capital that you think will get you to again, hundreds of millions, whatever whatever the goal is. What do you need in terms of financial partner? Because money is money, but then again, what it comes with can vary.
Absolutely. I think, let me segment that a few areas. First, in terms of quantum, we're looking at a $15 to $20 million equity check at Series B. Because we'll be profitable going into that, we may raise debt if that's an efficient way of doing so as well. We've been approached by some partners in that space. So we think that's a trend. So that could increase the round to a 30 kind of plus round. What would that benefit? Absolutely. As we'll be profitable now going into Q2. So what's that money for? It's a UK, so it's market and it's product. On the market side, UK and European licenses we expect to obtain in Q3, and so we're going live in those markets. We're very interested in Saudi Arabia. We spoke to SAMA, the regulator there before, and then we may look eastwards. What are we trying to do in that market space? Build up a global regulated engine, just like you've seen across a number of the fintechs, so I can move money anywhere for business at any time. I can onboard any business, and it can be seamless. And then the product, it's go deeper in really kind of in a number of kind of specialisms in that area. One of them being stablecoin.
Mm-hmm. So I'd be remiss if I didn't say the two letters that everybody's talking about, AI. Obviously, that permeates everything from an operational standpoint. Do you think that has any impact on your product strategy going forward?
Or yes, I mean, well, this is the question. How you categorize this is important. So from an operational standpoint, you're absolutely right. We're using AI to do anything from risk monitoring to payment reconciliation, and it's just cutting costs and inefficiency and improving accuracy out of the business. We've already started doing that. So a lot of people say, oh, you're going to have to hire loads more people. No, we won't. We're going to hire some more people. We're not going to go and hire 3x times our pay ops team. I've told the team I want to keep that almost static if we can, right? So there's the operational piece, which I really don't think that can be understated. If you look at most of the cost and inefficiency in a financial institution like a JP Morgan, even to some of the fintechs you have seen, AI could strip out 60-70% of cost base and still make it more reliable. So what does that do to your profitability, to your evaluation, etc.? So that is the easiest low-hanging fruit, and that's considerable. The second component of it is new product innovation, and that is going to be around real-time pricing, how you price everything from an FX currency pairing to how you price risk around more complicated products like financial lending products. And so I think you're going to go and see that area, and that's an area that I'm looking to explore this year in depth. We've got some people who are very knowledgeable in AI. We will be hiring some specialists in that space.
Well, I have the feeling, Kevin, that we could have a much longer conversation and maybe another one, and it won't take another 2 or 3 years before we can have the conversation around you being a much bigger company than you are today. But I do promise my listeners that this is relatively short. They can sort of turn this on when they're going to the grocery store and have finished by the time they're checking out. So let me ask you just one final question. You said you're 41. You're meeting your younger self who's 20, 21, 22, let's say, and saying, hey, I want to start something. I've got this bee in my bonnet. I have to start something. What words of advice would you give to your younger self, knowing what you know now?
I'd give 3 pieces of advice. Number 1, make the leap earlier. Don't wait for it to be really wise and save your kind of, I'll get my money up to my savings up at this point, etc. Take some measured risks, but do so and you can do that in your spare time, etc. Number 2, community is everything. Who you surround yourself, who you can bounce off ideas with, exchange, who you can recruit from, who can introduce you to either talent or fundraising, etc. And number 3, when you raise money, be way more Scrooge in your approach to spending money, right? Everyone raises money and they go, well, everyone's going to grow really quickly, so we're going to get a massive amount of our market share. Build and launch carefully, and do so with a much strict financial discipline. That's the one strategic error I would have made over the last years.
But what's interesting about that is it's a little bit different from what a lot of the startups in Silicon Valley do, is because they have so much access to capital, they throw huge amounts of capital. And I think frugality is way down on the list of values, I would say. So it's interesting. There may be a very, very different approach when you're outside, and maybe even in Silicon Valley, it's a good piece of advice as well. Well, Kevin Kilty, thank you so much. This has been really exciting. And hopefully we will have another conversation sometime in the future. This is everybody's ScaleApp Podcast. This is Dan Eisenberg signing off as you are checking out the grocery market or the supermarket with your groceries. And as you know, again, this is a serious hobby for me. I don't do it for the money. If I did, I'd be a failure because I'm not making any money. This is fun. But it's more than fun. It's serious in the sense that we use the Scale App Podcast as a kind of platform to unravel the mysteries of scale. I will tell you something interesting that I don't think I told you all before. I was asked to give a speech a month ago in Athens on how you scale up. And rather than giving the presentation myself, I transcribed all these interviews. I used AI to crunch them and do a content analysis, and I just put it up live. And together we had these 30, by then it was 31 episodes. The audience and I had these 31 experts with me, and we just asked them questions through Claude and got the answers with specific examples and debated them. So I hope this will build up, all these interviews and discussions will build up into a real knowledge base on how you scale, and we can use that to help whoever wants to grow a company. You say starting is relatively easy, I think, even though it's not easy, but it's relatively easy. Growing is really, really hard. So anyway, again, thank you, Kevin, for sharing.
Thank you, Dan. Thanks for the time. Great
Yeah,
speaking with you.
Scale Up Podcasts, everybody signing off, and be safe out there. Thank you very much.